let me put the question to you that has been really up for debate for very much of this year. Why buy back shares? Why use that money for repurchases rather than buying assets, expanding operations into new markets, new products? Can you just not find anything out there that would be more profitable?
It's a great question. Thanks, Matt. In the first case, we do see opportunities to deploy some of our capital, and we're doing that in ways that we think are going to be value creating. If you saw in the January 1 renewals, we've actually increased our premiums in their core P&C Re business by 19% year on year, and we'll look for opportunities to continue that expansion. In terms of buying specific assets, we'll evaluate opportunities in the market, but at least at this point in time, we don't see the value creation opportunities for us at the current price levels those assets might be looking for. With respect to the buyback itself, I think one of the things we can say very clearly is in the last 2 years, 2017 and again in 2018, with the large losses coming from natural catastrophes in particular, we've been able to absorb these losses and maintain a very robust balance sheet. And that balance sheet is in significant excess to the target levels that we've already made public with respect to the Swiss solvency test. And we're very comfortable, as is our board of directors, to approve a buyback which has $1 billion committed soon after the AGM and a conditional $2 billion depending on the development of our excess capital during the course of the year.
Of course, the argument for buybacks is that this way you give the owners, the shareholders, the decision of when to take the tax hit themselves, and it should boost the value of their investment. A lot of times that doesn't turn out to be the case, but Swiss Re has done relatively well. If I look over the last 5 years, I think with reinvested dividends, you're up 10% a year, more than that. Do you expect that kind of performance to continue, John?
I mean, the stock market will determine what our future performance will be. What I can say is we think these measures leave us with a very strong balance sheet. The additional opportunities for growth in this space we think are there, and we'll continue to pursue them to the degree that we see the opportunities for creating values for the company and for the shareholders. I would say that you're exactly right. We've returned between dividends and share buybacks $14.5 billion to shareholders in the last 5 years. And in addition to the new share buyback program, we're increasing our dividend from 5 francs per share to 5.6, a 12% increase, which again reflects the confidence we have in the earnings capabilities of this business.
The stock market has done quite well in the beginning of this year. Obviously, it did horribly at the end of last year. How does that affect decisions like, for example, do you IPO ReAssure, or do you go for a straight-out sale?
So as we said last year, we are making the preparations for an IPO of our subsidiary business ReAssure, which operates in the UK. Those preparations continue apace, and we'll look for the opportunities to execute the IPO. That is our plan in 2019, specific timing to be determined in part by market conditions.
So an IPO a lot of times means that you are going to continue to be an investor, obviously, in that business. What are the benefits of retaining a stake in ReAssure?
The benefits, I think, are twofold. In the first case, ReAssure has delivered a large amount of cash back to us as the sole shareholder and more recently majority shareholder, as a Japanese partner. MS&AD has come in last year to take what will be a 25% share of the business along with our 75% share. So that cash generation will continue to flow back through dividends to us as a minority shareholder if we get to that position. In the second case, we think this is a business we understand very well. It just doesn't fit particularly well in the consolidated balance sheets of Swiss Re, in part because of the capital requirements we have here in Switzerland.